First of all, I want to welcome you guys to the show. We have Doug Hudnall with Synovus Bank here for Fit Friday. And we're going to kind of open the show a little casual first. We want to find out from Doug who his favorite team is. Now, he's going to tell you where he's from, and then he can tell us who his favorite football team is, his favorite basketball team is, and his favorite college football team is. So tell me.
Well, happy Fit Friday to anyone that's out there listening and watching this. I hope we share some great information with you. So I think you've come to the right spot if you want to know anything about the mortgage industry, real estate industry, and how things are going. So Sandra kind of opened that up with me giving who my favorite teams are. And that's going to be very easy. But first, I'll tell you where I'm from. I'm from a small town in Meridian, Mississippi. Most of you may not have heard of it, but it was one of the cities that was burned down during the Civil War. And it was a big spot for the trains when they were shipping cotton through the South at that time. So little tidbit there if you didn't know that.
And Doug's a historian for all of you guys who are historians.
I am a historian. I'm a big war historian. Anyway, I attended Millsaps College, played football there on a college scholarship. Had one day in the pros. I had a pro day. That didn't work out. So ended up being my favorite team, which Sandra will love this, was the Dallas Cowboys. That's who I had my pro day with. So that's my favorite, I guess you could say, national football team. My favorite basketball team, the Boston Celtics.
Oh.
I'm a big Celtic fan, always have been. And without saying, without further ado, Roll Tide all day. Don't hate. I'm a huge Alabama fan, so if anybody wants to talk college football, give me a shout.
I'm surprised you don't have your hat on right now.
You know, I started to do that, but I thought I'd keep it a little bit more professional. So they pick on me at work because on Fridays we have Casual Friday, and I let my team members wear their favorite gear, which tends to be my Alabama gear. So
so their favorite is also your favorite.
Well, that's the way it has to be. So, you know, they can't, I have a sign in my office saying, if you're not a Bama fan, get out. So, so they know that. But all funning aside, I'm glad to be here today, sharing a little tidbit about myself. I currently am a market sales leader for Synovus Bank. We basically serve the southeastern United States. Synovus Bank has been around since the 1800s, so a lot of people don't know that. We've been around a long time, and we one of the top small banks in the country. We currently now sit with probably a little over about 50 billion in assets. And like I said, again, we service pretty much the southeastern United States. I am based in Atlanta, Georgia, and I run a team here in Atlanta, but basically can cover any of the 6 states in the southeastern footprint.
Nice.
Yeah, so we cover a market. Now, unfortunately, I don't go out to Arizona. I would love to go to Tucson, but it's a little out of our marketplace. But as we continue to grow, who knows what the future may hold.
Well, make sure you let us know out here.
Yeah,
we'll welcome you.
Well, I would appreciate that. I did look at some of your properties, so I think I need to buy a vacation home, right?
Yeah, well, you need to call me when you do.
Well, don't worry, I will.
So
that's a little bit about me. So, hey, Sandra, you can go ahead and open it up. Whatever you've got, I'm going to follow your lead.
All right. Well, since you kind of talked about the service area, kind of tell me a little bit about what services you guys offer. So, of course, you know, I'm in real estate, so I'm really leaning heavy towards mortgage. But, you know, let me know, do you do commercial, residential? Give me a little bit about what your services are.
Well, we do everything here. We're a full service bank. We offer everything from the residential mortgage, obviously, to the consumer loan, equity lines, commercial lending. We do a lot of restaurants. McDonald's is one of our big clients here in the Southeast. And we also do a lot of hotels. So we do pretty much anything that you can look for is what we do. My specialty and what my team and I focus on would be residential mortgages. So consumers like yourself that are looking to purchase, refinance, buy that secondary vacation home, or in some cases buy that investment property. That's what we do, and that's what we kind of focus on. We work closely with realtors, builders. We get a lot of our referrals from other lenders, actually. And obviously, we work with the companies that may not have some of the products that we have available.
Nice, nice. So can you kind of help me with everything that's been happening right now and people aren't real sure what to do? What's the current market like, and how are the credit scores for getting an FHA loan or a conventional loan or even doing a VA loan?
Yeah. Well, that's a good question and great segue. This is a great market right now. You'll probably hear a lot of rhetoric out about, is it a seller's market or is it a buyer's market? I think it's a little bit of both. And part of what's driving that is a couple things. One, you're seeing interest rate at all-time lows. I was asked a question earlier today, well, do you think they'll get any lower? Well, as my response was, I don't go to Vegas for a reason, guys. I'm not a gambler. So, I like these rates where they are, but there are some people that are a little more aggressive. But we are seeing rates all-time low. So that's driving what in my estimation, is a lot of the buyer's market, because people that were on the fence are now off the fence because they're, well, wow, I can get interest rates at this point where 4 or 5 years ago you wouldn't have seen that. And I think from the seller's side, there's a lot more activity going on because, one, new construction is up. I think, two, because of the demand with the low interest rates, it's causing a lot of people to come out and want to buy, which is now giving sellers opportunities to put their homes on the market, which has had some rebound from recent years of values going up. So that's been the big plus there. So I'd say it's a both markets for everyone, but for buyers, you can't find a better time. Interest rates, you kind of asked the question. I mean, we're seeing rates in the low threes, okay, and below that in some cases. Everything's different, though, as you know, so that all depends. But let's talk about the programs you just talked about, FHA, VA, conventional. First of all, if anyone doesn't know a conventional loan amount, what that number entails, and by the way, it does vary by area and state, but the conventional limit is $510,400. That's a conventional loan. Anything that or below, anything over that is what we call a jumbo. But you're looking at, on a conventional loan, typical score, which is around 620.
Okay.
Not bad. That's pretty good.
Yeah.
FHA and VA, those are going to vary from lender to lender, but if you were looking at it today, your normal average is anywhere between 620 to 640 for an FHA or VA. VA loans, obviously, military or veterans. The benefit with the VA is what? It's 100% financing, and that's why a lot of people go for that. So any of you military people out there, if you haven't thought about buying, this is a great time to do that. FHA is what I like to call a little bit more flexible when it comes to credit, debt to income ratio, things of that sort. But again, it's very attractive if you've had a couple of spots in the past that may not meet the conventional requirements.
Now, when you say spots, what does that mean exactly?
So let's say you had maybe a late or a delinquency in the past, or you had a little credit mishap, maybe something. A lot of people have had challenges, especially back in 08 and 09, a lot of downturn, people lost jobs, which we're seeing some of that during the pandemic. Well, some people suffered credit challenges, and FHA was one of those vehicles that allow people that may have had a challenge to still opportunity to purchase a home. So that's what I mean by that. But what I recommend to everyone is, whomever your lender may be or banker, talk to them, ask them about the program so you have a good understanding of what's required.
So how do you correct that? I mean, you had the downturn and your credit was really bad, and maybe you filed bankruptcy. How do you work towards getting that credit score back to a 620 or 640 so you can qualify for anything?
It's with everything. It's very simple. It's going to be a little hard work, and it's diligence and being able to focus on what you need to do. And what I mean by that is, obviously credit is very important, but it's how you manage it, okay? Again, manage the debt you have, pay on time, keep your balances low. The biggest thing, especially with credit cards, those are what I would call the evil cards. You send somebody a credit card and they have a $5,000 credit limit, the first thing they want to do is go out and spend that. Well, you want to be smart about it. Only use it if you need it. Keep your balances low. The rule of thumb is you want to keep your balance about 30% of your credit limit. If you check people, that's what they'll say. But really the biggest thing is paying on time, And if you've had some credit challenges in the past, it's really going to be about time, a period of time of keeping that and doing it over. You mentioned bankruptcy. If you've had a bankruptcy, hey, look, that's happened to a lot of people. But one of the things with bankruptcy, especially with FHA, the turn time or being able to buy a home is reduced compared to, say, conventional. So whether it was a 13 or a 7, I mean, you could be looking at a 2-year waiting period versus, say, a 7-year period or 4 years. So that's one of the reasons FHA became so popular, is because it allowed that 2-year period where a lot of people, okay, my discharge is over, my account's been dismissed, it's been 2 years since that happened, I've gotten my credit back to a point, now I can buy. The other advantage of FHA is minimal down payment. 3.5% is what you typically are looking for. So that's a little easier than if you're trying to put 5% or 10%, especially if you don't have that amount at the time.
So now, are you familiar with, or do you guys have down in Georgia the down payment assistance program through FHA?
Yeah, everybody has DPAs. Down payment assistance or DPAs. I'm a big acronym person, so those are real popular. Whether it be FHA, they can be used in conjunction with conventional loans. A lot of people don't know that, but they can. But those were really designed to help people or inspire the ones that want to buy but didn't really have a lot of down payment. And, a lot of those DPAs are either state-run programs, some are federal, just depends on the type of program. And you have to meet certain requirements, obviously, even with the DPAs. But they are what I like to call a great tool for those that aren't able to, say, put a large amount down. The only thing I warn everyone is with DPAs, you got to be very diligent with them because they're regulated by the government typically, and they have specific requirements. And in today's market, if you're using a DPA, expect a long closing timeline.
Oh, wow.
That process, you have to go not only through the bank, but you also have to go through the DPA underwriting process, which right now, because of all the volume, it's been a pretty long process.
How long is it for you guys down in Georgia? About 60 days or 45?
Yeah, I'd say 45 days. You're probably, just with volume now, but anyway, between 45 and 60 days. If you're using a DPA, I tell everyone to expect at least, that 45 minimum. It might go sooner, but because of their backlog, that's caused some delays. And if you're talking about a refinance, most lenders will tell you they're probably anywhere between 45 and 60 days.
Okay.
And wanting to refinance your mortgage. So, and a lot of that is just because of the demand right now, interest rates being so low and everyone obviously wanting to take advantage of that. And while the banks are working tirelessly, obviously with the pandemic, a lot of people working remote now, not working in an office environment like they normally have been. And so that's caused some delays also.
So speaking of that, that's a great segue into what's happening with the pandemic. Has COVID-19 affected your market at all?
That's a very good question. It hasn't had the impact that I would think, or as most people would say it has. And we did a good job here at our institution of really kind of getting ahead of it. But the biggest impact is just we've required more paperwork. We required what we call a questionnaire just to tell us how has COVID-19 affected your business, especially for the self-employed. And that's where it's really had the most impact, employed. And really where I've seen that impact would be the general services, the public. So for instance, dentists, doctors, offices where they weren't really open, and their customers where, a lot of face-to-face or interaction. And because of that, as you probably know, or maybe not, when the pandemic did happen, the CDC stepped in and had a lot of places close their offices.
Right.
Because it was like, look, if you're having face-to-face contact, you can't really do that because of the way that it kind of travels. And now I know there's some debate whether it's airborne or not. So, but that's the biggest impact. I think the food services industry, the hotel industry, we've seen a lot of that, where you just haven't seen people going and being able to do those vacation and trips and go out and eat, where we've seen most of the impact. But for the most part, people have been very responsive in completing the questionnaire and providing the necessary documentation. And, the PPP, which was the payment plan that was put out for self-employed. You know,
Right.
a lot of people took advantage of that to keep their payrolls going. But there have been some struggles with it, just simply from a lot of companies have really suffered because their volume and income has kind of dropped, which is kind of had an impact. And most of the people I've seen it would be those who have been furloughed or laid off.
Oh, right.
The company's not working. So if someone's in a situation wanting to purchase, unfortunately, if you're in that bucket, if I can use that phrase, unfortunately, that's a challenge for a lender to make a loan today.
Makes sense. Makes sense. Well, so is it a good time to buy? I know you keep saying interest rates are low. I know you keep saying, you know, there's inventory out there. People are getting the paperwork. I mean, would you say it's a good time to buy?
I would tell anybody this is a great time to buy. It's a great time to buy. It's a great time to refinance. It just depends on what your current situation. But if you're in a market right now and you've been sitting on the fence, this would be the time to do it because money is very cheap. And I mean, in the sense of interest rates are low. Now, there will be a lot of debate that everybody will probably hear. Well, you know, lenders are a little tighter now. Well, the credit standards are a little bit more. Not necessarily. While there may be a little bit more review process, nothing's changed from where it's been as long as I've been doing this, and I've been doing it for 20 plus years. But it's just a great time to take advantage of these programs. You mentioned DPAs. You know, DPAs weren't around 20 years ago. Now you have that. They're trying to help. Every lender has different programs. I'm sure your lender there in Tucson of trying to help people that want to buy that maybe can't buy. They're offering opportunities. So yeah, this is a great time to do it. And as they say, ride the wave. Will it last? You know, we don't know. But if you thought about it, I think this is a time. If you're not really sure, call your banker. Or, you know, if you want to buy, call your realtor. And your realtor, I'm assuming you have some relationships there. But or they can just tune into this YouTube.
There you go.
And they can find out information on that. But yeah, this would be, and just in my opinion, an opportune time to do it if you're planning to do it.
So let me have you push back a little bit. I want to see what your shirt says there.
Okay.
Kind of mentioned it before the video starts. Show me your camera. I can't see where's your, do you have a logo? There it is. Yeah. There's the logo. So that's the company that we're going to be looking for when we're looking for Doug Hudnall. So before we wrap this up, I do have another question for you. It has to do with forbearance. And I can't see you. Where'd you go there? There you go. Give me a little tilt on your camera.
All right, let me get
there you go.
Here. There we go.
So give me a little bit of info on forbearance. And I know that, you know, that's a big word that everybody's hearing right now and everybody wants to take advantage of it. Give me the quick pros and cons in, you know, 15 seconds or more.
Well, the biggest pro would be if you're in a situation where, you know, either you're in that furlough or laid off and your mortgage is in, you know, obviously you can't make that payment. The forbearance was really designed to help you through that phase or whatever that may be, how long that is. And it is there to help. My biggest concern or the biggest downside to that, if you're in a forbearance or participating and you decided, hey, I wanted to refinance my mortgage because I heard Doug said the rates are so low, so I'm going to call my banker and I want to do it. And they find out, oh, look, you're in forbearance. Well, forbearance basically means you haven't made your monthly payment. And how many payments have you missed? Well, some of those forbearance could be for 3 months. It could be for 6. I don't know. Every lender is different based on your situation. And so what happens, that has an impact on you being able to qualify for a loan. And so while it had good intentions, I think a lot of people don't really understand it. And so it really comes into play if they're trying to do something, even if they're trying to buy a new home. And maybe they had a forbearance on their old home and they want to go buy, and now that forbearance shows up and it's like, well, unfortunately, Doug, you can't qualify because you've been late on your mortgage. Even though technically you're not late, but the forbearance is basically indicating you cannot make your mortgage payment. And so lenders look at that a little differently. So what I would tell you before you agree to any forbearance, or if you're talking to anyone, really understand and ask your lender, what is the impact of this affecting me if I wanted to purchase or buy? They will tell you. And if you do any research on forbearance, it'll tell you that. So try to avoid it if at all possible, if you can. And, you know, I know people have taken advantage of it because it's there. Well, if you really don't need it, don't use it because it will have an impact on you. Now, with that being said, They have tried to make some changes because there has been a lot of grief around that. And I do know Freddie Mac, for example, which is one of your conventional products, they have relieved or kind of, made it a little bit more easier if you have participated, but you have to meet certain guidelines. So talk to your lender about that. You can do some research if you like to Google. But as long as you have, say, come out of the forbearance and your accounts are current and you're paid current, you should be able to take advantage of a refinance or a purchase transaction. But right now, that seems to be the only agency that's obviously given some relief to that, where people can start saying, like, okay, it's not such a bad thing.
Well, I think you've given us a lot of information, and I think it's been valuable information. Yeah. And to bring to everyone so that they know what products are out there and what you need to do so that you can secure that first home or that vacation home or second home. So I appreciate all that information.
Well, if I can close by saying this to anyone that's listening or watches this on YouTube, look, knowledge is power. We've all heard that. It's all been used in a lot of different ways, maybe a little corny to most, but that's a true statement. And anytime when it comes to mortgage, especially for a first-time home buyer, the more knowledge you have of the program, the products, your credit. Look, don't be afraid to know what your credit is. Where a lot of people are afraid to, I have no, it's like going to the dentist. You have to go, but you don't want to go because you're afraid. Well, it's one of those things. You need to know this. If you're going to buy a house, you need to know, okay, I want to have so much money to afford that. So learn as much as you can. Contact someone like Sandra if you're looking at a home. She has a lot of different ideas and information she can help you with. Hey, you can contact me, or call your local banker. We all have someone we bank with. Everybody has a checking or savings account with someone, and someone has something. So if you don't know, ask the questions. If you're one of those that love to Google late at night, you can find just about as much as you want there. But I think knowledge is very important when it comes to buying a home, knowing the products, do your shopping, do your research. And I can probably be willing to bet anyone that watches this, when you go out in the world and you're buying something, you typically look for the best deal. I think we all do that, right? And we find out about that product before we actually spend on it. So what's different from doing that with your mortgage? So that's what I would encourage all first-time home buyers. If there's some classes near where you are and you want to attend, please do. Most of them are free, and learn as much as you can about it. It'll make your buying experience a lot more pleasant.
And if you don't know, now you know.
Now you know.
So before we go, though, can you at least give us your contact information so that we can tell people that are in the Georgia area how to reach out to you?
And if you look at the screen, I think you have my contact information up there, but you can always email me. My email is Hudnall@Synovus.com. And always send me an email. I work pretty late. I'm always available there. Or you can try me at 770-254-7987. And you should be able to catch me. Or you just Google me. You'll find me out there. So I'm pretty sure if you have any questions, if you're in this area or in the market I serve, I'll be glad to help you out. But if it's just a question, by all means, I do a lot of classes. I do a lot of first-time home buyer seminars. So, I do a lot of that, trying to give people just education, understanding. So whether I do your mortgage or not, that's not the goal of it. It's to basically just educate and give you information to help you achieve the American dream, own a home.
Thank you. Well, we appreciate you hanging out with us on Fit Friday and bringing all this information to everyone. And I'm sure you're going to get a call from someone asking you to help them.
I'm all for that.
All right. Thank you so much for your time, Doug.
All right, guys. Well, you guys have a great one, and roll Tide.